Yo, what's up, guys? This is your boy, Mr. FX. So today I wanted to put one of the best content on my TikTok, and I just want to do this video about demand and supply. So I'll not, without wasting time, let me show you what I understand by I talk of demand and supply. What does it mean? Most of the time, price moves from demand to supply, from supply to demand, of course, but there's a lot of terminology out there. People talk of liquidity. There's a lot, but let me show you my point of view about demand. So let's say that these are supply zone and the demand zone is below here. Price actually moves from demand to supply, from supply to demand. So the market price might be like this, will hit this particular demand, and what will happen? It will go to your supply. And again, from there, after hitting your supply, if this supply is of high quality, of course, your supply needs to be of high quality. If it's really good, then you can go to, it can hold back to another demand, or if there's, and remember, once the demand is tapped, it becomes weak. So a demand or a supply is just a level that has orders that you want to use, and there's characteristics on how to identify the footprint of a level that has orders. You need to see a very good imbalance, and it's not the fair value gap. I'm not talking about fair value gap about that when I say imbalance. Price, when it comes back, if it hits this level and this is still a level with the high imbalance here in terms of accumulation of orders, price will still go back here. But if it doesn't go back here, it will break and go to, maybe you have now another zone above, hit that zone, and most of the time what happens, price will go back to the origin of the move where it initiated, depending with the time frame you are using. For example, if you are using the daily time frame, price, if this hits this level extreme, this is a zone that is very powerful, the extreme level. In between here, we can have some levels that price was creating as it was going up, but once it hits the supply, the zone with the high quality, high probability can be like, this can be a new zone here. So the market's likely again to push from that supply like that, and hit this level. Again, when you hit this level, we are likely again to, it can even go back here on this zone and go down, or go to the extreme where it started the whole move, go back to the top here and go to the downside. And this means that your level has shifted like that. So you can be able to follow your demand levels and supply levels once you know what you're looking for. So let's come here. Right now I'm looking at this particular pair here. This is a Swiss franc. And when you look at it, we can see how it's been moving. Like this is a real chart of like the USD CHF. But let's see, you can see when you want to identify the current price, always look the top and the bottom, regardless of your time frame you're using. So for example, on my time frame I'm using, I look at the bottom. This is the bottom I have as for now. And I look back, because when I look back on my left, I see the level that was here. This level was already used. This level is already used. Let's do this. Here, see, you can see this is the bottom here, and the top, can mark that as our area, right? This can be your demand. And you look at this demand has already been mitigated. As you can see, a very nice drop on the zone, and the zone price has gone up. So when you look at the level that was supposed to be used, look at this. Let me show you. Let's talk of this. Let me cut this market here. All right. Let me cut it here. Let's say price hits this is your level. This is your level that has been tapped. So as in the area where the market started going down is the top, which is here, this top. So you can go back here and identify what you call the initiation of the move. And here you can see this is the, like what you get to see here, the move to the upside. And this, like, you can see there's a lot that is here. These are the things that I'll for the private community I'll not talk about, but I'll show you what is here. This level, look at it, has been tapped a little bit. So I can take that zone up there, and that is the zone that has been left as the supply, high quality supply, that price when it start going up, of course we can see price market has moved from that extreme zone to this bottom. So we expect that if the price hits back here, it will go back up here, and if it hits back here, it can still push back to the downside if this level will be able to hold. But this level is of low probability, as it's not a fresh zone. You can see it's been accumulated fast, and you can see even the little zone that was left behind when the price went to the downside, this was the supply that was again mitigated. So this level seems to have little orders in terms of reaction, but you can see some good institutional candles there. So let's see what happens. So when you have a zone like this, then you expect that the price will move from this zone to this particular supply here. So let's see what happens here. Let's see, let's go up, accumulation of that area. See, okay, can see how price moves. And if the zone is of high quality, you'll see this kind of institutional candles. When I talk of institutional candles, these are candles that I'm talking about. When you look at this here, you can see those. Let me zoom in. See, those are the institutional candles. They are always originating from a zone of high quality. You'll see them here. Look at that. That's a very nice one. So let's see, once we hit our area at the top, what do we get? Okay, let's go. I want you to see the reaction we'll get on that zone. Okay. Let's go. All right. I don't want just to give it a straight play because, okay, because I want to see you see the reaction we get from this area, because it's a level that push the price away. It might not push price as far as you want, but I want you to see what we'll get here. Okay, let's go. Okay, you see we hit that level, we react. Now, when we react, what happens? You see that? See? Are you seeing that? That zone, even if you have marked it wrongly, price will start reacting. And if the price really wants to go up, what's the nearby zone to create continuation? If the zone below here was used, then the zone that it will follow will be the zone that has what we call a footprint, institutional footprint, which is this zone here. Here, that's like an entire zone there. This is your entire zone, which you can look at it as another demand. And the next zone that looks like also seems to be giving us the same ideology. Look at this price when you come down here. You see there's something here. I'll zoom in a little bit more so that, what the hell, that was too zoomed out a lot. So let's do it again. Zoom, yeah, okay, you can see here from where the current price is. From the current price is, you can see this will have a drop. These are very nice. Then you can see the institutional activity here. All these other remaining areas I'm not interested, but you can see this area looks a little bit good. So can say this can be another area if the price wants to continue going higher according to demand and supply. Because remember, we have identified a supply zone that the market has hit this supply, and if it really wants to go up, to continue going up, the only two areas of interest that it should use, it is either by coming here and going up, and now when it goes up, it needs now to break this level and go higher, or go below back to this origin here and go to the upside. So here, according to demand and supply, we have two levels. We have this level and we have this one. This, if the price goes back here, we'll get a very big move. But if the price comes back here, we might get a move, but will not be powerful like the one we get here. So let's see where the price will go. Does it really get to reach there? Okay, what's happening? Price went back in the zone. Price went back in the zone. So here we have another level. So I'll remove this one and this line, show you what we have here. Again, since we have gone back on this supply, and we talked about this earlier, that this supply is already used, so low probability. So you can see, according to this market, look at where the price here. Still, the price might push lower, but look at this. We have this area, and we can see we have the same similar zone here. We have an explosive candle there, which means that here, this is another zone of high quality. And guys, I'm on a weekly time frame. So this is another area of high quality. So here we have 3 areas to look at. And we have the first one, price go back here and now break the zone. Our price push lower here and break the zone to the upside. So this becomes the level I want to watch, and now I'm not interested in the level below because since price wants to go higher. So let's see what happened here. I'll just have a play button short. Sorry, man. Price went away so fast and left this zone. So you can see this area is broken, and right now we can do this and remove this line here. But you can see price really wants to go up. So here we are left with 2 zones, but right now I'm interested to look at this zone, but you can see here we have another zone. Look at that. Sorry, I have another zone here. Oh man, it's very cold out here. So we have this particular zone here. So we have 2 levels almost at the same area. We have those 2 areas, 2 demand. So here, these 2 levels are likely to absorb this one, and this one might not work for now because we're having this a very huge area of interest that will eventually push this price to the upside. So let's see what happens here. Price, let's see. So here you wait. Once price has left the zone, you don't chase. Wait for it to return. Let's see. In the return, what do we get? Push back, the zone. There we go. We are now in the zone. I'll anticipate this higher quality level. This one is like when price, the way the market is likely to push back to the upside. But I think this one to me looks a little better. But let's see what happens. Both of them are high quality demand zone with the all condition, like all the rules are there of what I want to see, the rules behind the quality demand. And let's see what do we get. Price pushed, almost touched on the level below. Okay, nice. We are down here. So this one has been destroyed. So we're here. So this is a level that I want to pay focus at, because if we have messed up this one, then this one must hold the market. So let's see. Now we have 2 levels of interest, but currently you can monitor this one in real time. Let's see. Price there, price kind of see. Yeah, very nice. Very good reaction. Price goes back in the zone. And what happens? Let's see. Does the level hold? The price, the level, now the market start walking away from the zone. So you can see here, we're not talking about liquidity, we're not talking about anything, just pure demand and supply level. And that's why you see, you always want to have your stop loss below. For me, I like using this particular tool. Let me show you. Let me assume this price was here, and there's this tool I use here. This, when I do this here, and I want to place my stop loss, I'll just do this one here, the same tool. Then here where you see this color here, I'll remove this. And that's how, regardless of the time frame I use, that's how I measure my stop loss. I'll have my entry here in the zone, but my stop loss will always be here, right here. So if I'm going to target, let's say, because it's a bigger time frame, this is just like for learning purposes. So you can say 1 to 3 risk ratio, man, like that. So let's see if that stop loss is gonna find me if I was to trade this one in real time. Let's see. Boom. Okay. Okay, almost. Yeah, you can see, look at that. So you see, so always having your stop loss just below the zone doesn't mean that, okay, there's this issue of liquidity, but that one we'll talk about some other time. So let's see what happens. Price now start pushing away from the zone. And do we hit our TP? Let's see. Okay, there we go. So this is just like a back test here. And since we look at the trend, so I'll remove this one and we look at, let's say, let us remove a lot of drawings on our chart. So we'll do this. I remove this demand here. I remove that line here and this supply. Oh, sorry, I wanted to talk about this supply that was left here. Can you see this small supply? Even if we are wrong, you can see it gave you a very nice reaction there. So price moving away from the zone like that, according to high time frame, according to high time frame, this is what we get. And let's see just a minute. So when you look at the entire trend, we can tell that we are in a bullish market. We are in a bullish trend here, as you can see. So here we still have a very nice area of interest. You can see when the price started pushing away, this is a zone that initiated everything. So you can again uh, look at, let me just delete everything here. And since we are in a bullish move, where do we get a high quality area? We can see here, this is where the price started going up. So we have this particular zone. This zone, at least 25% of it has been tapped. But when you study SMC, you're told that if the levels mitigated, don't use it. I think we should have rules behind the levels we use. And here, you can see to me this still a high quality level, which is a demand. But if I follow SMC, then I need to follow, look at this particular area. You can see this is the area that I should use. And let's just challenge ourselves and give it a different color, a deeper color. Then we want to see how that level will hold for me, because this level has been mitigated. But we look at the area. Let's zoom in a little bit. We look at the mitigation point. It's not even 50% of the zone. It's like 20%. There, you can still take that level, like this level still well. Again, you can see when you look at the current price here, you can see price had another zone here. This is another zone here, which is nice, high quality still. This is still a demand zone. And this is where when you start measuring what we call high quality zone, you'll see that every time the level down here is of always the extreme levels. If the price returns and goes up, it might not be of high quality than the original zone that initiated the move to the upside. This move that went up started from this low. So this means that if the market can push back into this zone and go higher, this one will be of high quality. So let's see how price does. And here, guys, we're just following demand and supply. Very, very simple. So let's see price. If it turns back, because market has to come back, okay? Hit this first level, you can see a very nice reaction there. Of course, trading on a lower time frame can make something out of it. You can see rejecting and price going through the zone. So the zone has already been taken out, and now we can remove this here, and that zone. So let's look at this SMC zone here, the zone that's not mitigated. Let's look at it. Okay, price. Okay, the level is tapped. Look at that. The level is tapped, and okay, you can see the level is taken out. Let's see how deep we get the penetration in this level. We can see even if you are trading here, you could probably maybe hit stop loss. See, now looking at that zone, you can see delivery of price in the zone. And when you look at this one, look where the price came from. You see on this area, I did not talk of any supply here because there's nothing to show like there's anything good here. But when you look at this area, this is a rally, this is a base. You can see here, if you look at the top where the price started from and where we have this, I'll mark this because I see very nice move here. So here we have this. So reduce the supply. So you can see I have a supply up there, and down here this level has already been messed up. So the level below here. So if I was to trade here again, let's just measure our entry and our stop. Do this, and I'll do this. Then I like putting a line here. That, so that's where I'll put my stop loss. So this means that when I enter this trade here, my stop loss will always be here. And probably I want to target the next. You can see here we have something. If I go on daily time frame, that's why you need a higher time frame. When you go to daily, let's switch to daily. When you switch on daily, you can see you're going to see a very nice, look at this. This is a very nice supply, very nice area there. Very nice area that you'll want to focus at when you're using the daily time frame. That's why when you get your bias from a bigger time frame, plays a very big role. So here you can see we have another zone around here. But look at the extreme. The extreme will always win. So let's go back to our time frame and see how the market is going to treat those levels. If your level is not originating from a higher time frame, then there's high probability you're going to hit stop loss. So let's see. It's here. Okay, that's our area. Price stands a little bit lower in the zone. And okay, almost hitting the stop loss. Look at that. Okay, our zone has been tapped. You see, this was a daily zone. Of course, there's a very nice reaction. And okay, push the price almost back. Okay, let's see what we get. And look at that. Price went, look at that. Price went up. So here, this level was nice that it was seen on a bigger time frame, but on the daily, it gave you a very nice reaction, but eventually failed. So you can see we have hit the supply zone there. Hitting that supply, like if this was a trade 1 to 3 risk ratio done, so we can do this here. We know that this level has already been used, and we can now come back here and talk of this area. This now your new demand, your new demand here. This is your new demand. According to that, of course, this is also another zone. This is another zone that you should not play with, but it's so huge. And if you want to refine it, maybe here, but this one has a low probability because, of course, if the zone doesn't initiate the move, then expect low probability from the zone. So this one, in fact, I'll just draw it and put an X on it. If I was to trade, I'll not use that level. So let's see what is happening here. So the price hits that level, supply. Where's my tool for stop loss? So let's the same. You have a bigger stop loss, you lower your lot size. So here, then I'll just use this, put that one there, and let's say I was to sell this pair. So I'll enter here and put, let's say, enter here, put my stop loss on that zone there, and probably I'll want to target the extreme level. Wow. So let's see what happened here. Just a little bit of back testing. Price start moving away. Okay, goes back on the zone. Wow. Almost hitting stop loss. Okay, let's see. Let's go. Okay, on the zone. Remember our zone here. Good reaction, but did not hold. Can see that's a very nice reaction. Very nice reaction there. You look at the zone, you can see this zone. If I take you to a different time frame, you're going to see the price trying to react there because it's a zone, but the problem is that it's not originating from the bigger time frame. So it's likely to be taken out. So let's see. Okay, right. Now we hit our demand below there. So you can see that level is messed up. So what we can do is that we can remove this and this level that was messed up. this one, and this one, this one, and this one. And now I've mitigated another demand here. Then look at the top. At the top again, you've been left with another very nice supply. Look at this here. This is the top. Then this is the supply here. So here's one. Okay. So price has, if you look at this, if I zoom in very close, you can see I've tapped our level. And if I was to use my tool for stop loss, this one, okay, this one here. So have a zone below there and entry point, stop loss here. So if I'm targeting here, then you can see here, if I go on a lower time frame, even here, look at this, there's this. These are very nice supply. It's more visible on the lower time frame than on the higher time frame. So this is a zone that also expect the market to react. And if it doesn't reach at the extreme, it might even push back to where it is. So here, then this can be your area, TP1, then TP2 up there. So let's see what happens here. Okay, let's see. Price, wow, goes deeper in the zone and okay, right. Price plays in the zone, and you see when you do your trade very well, price can take a lot of time on the zone, but it'll eventually go up. So okay, boom, that's where the price is as for now. That's where the market is as for now. So from the knowledge we have got here, this is where the price is, and this means that we might get, because it's a high quality zone, we might get a reaction back, then we'll go through the zone. So that is just like technically, that is the supply expect. So let me switch to daily time frame, right? And switch on daily time frame, you can see what we get here on the daily time frame. So this was a zone that was like trading on the weekly. To move it, the supply is still up there. So this area, you can take advantage of this. So guys, this one is the Swiss franc, which is the like USD CHF future of it. I see these are the price tap just on the zone and reacts immediately. And this market has a reason to drop a little bit more. We can see I have this market rollover gap here. The rollover gap is here. There's a lot on this chart. We might see a bigger drop. We can see another rollover gap here. There's a lot of gaps. We are likely to push back on the zone, but you can see this here we have a very nice demand. And here we have a gap here. If you look at the opening and the closing of this candle, look at this. This is a down close candle here. The next candle is supposed to open next here, not here. So this means that here also we have a gap that should be filled. So if you want to, you're trading a pair like USD CHF, then you should be looking for sell, because there's a zone where the price taps here and start going down. This is a daily time frame. So you can go to the 4 hours, and when you go to the 4 hours, this is how the zone look like. This is our gap that should be filled. So I remove that one here. And you can see if you wanted to get a proper sell, then can see our zone up there was tapped. So allow me to just remove this zone, save on time, remove that zone, and we know that the price is now reacting from a high quality zone. So we can do this, knowing that there's a high quality zone. If you look at this market, price has walked away from the zone. So the next high supply zone for a proper sell is this one. This is a high quality zone. Just giving an example, guys, high quality zone. And if you wanted to sell USD CHF, if you wanted to sell the Swiss franc, which is the future here, then this is how you'll measure your zone. Stop, let me just show you. I think I was to trade this pair, then my stop loss will be up here. So this will be the drop. Yeah, just expect the market to return. If the market returns here, then when you sell, then you need to know where you're targeting. And because we have this gap, probably the next area that I see a very nice demand according to the 4 hours time frame is this particular demand here, right? So if I was to trade, then this will be the target, right? This will be your target here. So this is a very nice zone that if the market can give a chance of going back here, then you can sell to this zone. So if you are selling the Swiss franc, automatically you are buying USD CHF because this is like the future of the CHF. So when you go to USD CHF, we should be looking for a buy because we're going to find the same chart and we'll be looking for a bullish move. So let's go to a higher time frame. Higher time frame, you can see this is the same chart on a bigger time frame. So the market is sitting on a weekly demand, right? There's a weekly demand. As you can see previously, this was the previous demand, like that. I have a teacher, one of my guys called Mr. Benjamin Scale. He taught me something to do with WR. Let me show you this one. Something about that. I think this one is he'll always ask, wait for that to be taken out. IWR, that one I borrowed from him. So yeah, so but this is like the entire zone. Price taps here, goes up, price went higher, come back here. You want to get a continuation, you go to your daily time frame. Daily time frame, you can see this is a daily time frame. You can refine this zone here. You can see, look at this very nice rally, base rally. Then you have a very nice mitigation here. So price hitting this level, you can now go to your lower time frame, like 4 hours. And this one, this Swiss franc. Let me get my watermark here so that you get to see. Yes, you see that's the CHF. So you can see the same thing you saw on the Swiss future. So you can see it's the area of interest. So I can remove this entire zone, sorry, this entire zone here, and you can see a very nice very nice demand here, very nice demand here. So if I was to wanted to trade the USD CHF, then I'll be looking for a buy. So this I'll measure my stop, put this one here, then here, then this means that my entry will be here, to close here. Then I'll be targeting. Remember on the Swiss franc we had a gap, so probably I'll be targeting this particular supply up here. That can be the exit point. If the price gives me a chance by returning to this area, then that's where we'll expect the price to go. Sorry, this, this is the price can give me a chance here to go up, because you can see even here we have another zone. Looks like a very nice supply, but it's not strong like the one above. So this supply here might reverse this price back to this demand and we go up. But this is just the idea I wanted to share with you guys, and I hope this has been useful. Make sure that you drop your comment, what you think of this particular kind of content. I'll see you around, guys. Otherwise, thanks.